Since 23, for almost 8 months and above, many of the banking stocks are underperforming and investors have not made any profit. To everyone's surprise, 5 public sector bank stocks rallied to the extent of 20% in a single day. Those stocks rallied after the report of the central government approval for 10,000 crore qualified institutional investment plans. Similarly, last week, IDBI rallied an impressive 30% for two reasons. Number one, the central government's announcement to accelerate the disinvestment plan of IDBI shares, and the bank announced a senior citizens FD interest rate hike. Now, the point to be noted here is that the proposed plans have not been materialized, but as soon as the plans were revealed, the stock prices started moving up. 2 days before, President Trump announced his MAGA theme, which is Make America Great Again theme. With immigrant and H-1B visa policies, the stock prices corrected and fell by 2%. This perfectly fits the Dows theory of market discounts everything. Hello everyone, this is Sunita and you are watching my YouTube channel Sunshine Stocks, wherein my mission is to bring quality research-based content on specific stocks and industries to add value to your investment journey. Today, let's learn more about bank stocks. Per Dows theory, the market discounts everything. What does it mean? It suggests that the stock price is a reflection of all past, present, and future events that have been received as a new information to the market that affects a market trend. That means market trends are driven by every new knowledge or news. In other words, the new information that has not been happened yet, but the market reacted already. For example, budget, war, or new order book, or any TV, social media information, anything. Immediately the market reacts. So, how a common person like you and me trade in this volatile or choppy market as frustrated children looking at their mother to open surprise gift box, we the frustrated retailers, investors looking at our Madam Nirmala Sitharaman to open her surprise red bag on 1st February to show some miracle. I don't know what is inside the red bag, but surely I know one thing, some of the bank stock patterns. Since 2020, we have seen many ups and downs together, especially the rally of some of the bank stocks and the underperformance of the same stock after 2023. So what next for the bank stocks? According to some experts, the BFSI stocks, that is Banking Financial Services Instrument stocks, will rally more than 30% in 2025. Let us analyze and find out how. For learning purposes, I have shortlisted 12 stocks from public sector undertaking, private sectors, both large and small caps, and will explain to you how the stocks performed over past 18 months. Please note that these are all the stocks in my watch list for a longer period, and this is not a buy or sell recommendation to you. Some of you might have noticed a peculiar pattern in many bank stocks. Both public and private seem to be stuck in a box. They are trading within a tight range, unable to break through strong resistance level. They have become range bound. Let me open the trading view and explain to you. February 2024 to till date, it is in the same range. Next, Canara Bank. From January 2024, whatever the range, it has touched the same level. Punjab National Bank. From December 2023 to till date, the stock is trading almost at the range of 95-96. ICICI Bank. It gave a rally for almost a year, it touched 1360. Then now it has corrected almost 15 to 20. Most probably that will touch the support level. HDFC Bank is a wonder. Almost for 4.5 to 5 years, it's stuck in the same rectangle box and not able to break. And recently, it has given some 15 to 20% up. It was trying to break out that level, but still it was not able to. Now the stock is trading something around 1600. Axis Bank. From November 2022, whatever the level, the stock has reached the same level as of now. It made a high of 1339. Now it is trading 940, almost a 35% correction. IOB. From October 2023 level, the stock is trading at the same level. Karnataka Bank. July 2023 level, June 2023, the same level the stock is trading now. IDBI Bank. What you can understand from all these stocks is whether it is a big bank, small bank, private or public sector, all the stocks are behaving in a same pattern. This is what I am trying to explain to you. It started in the mid of July 2023 and till date the stock is behaving at the same range except the Bandhan Bank. Bandhan Bank is a correction period. From the beginning it is falling. Now, what you can understand from all those things? It is in a range for past 1.5 years. Now let's go to the weekly time frame and understand how the same stocks are behaving in a weekly time frame. That is another eye-opener for us to understand. Most of the stocks are forming either head and shoulder pattern or cup and handle pattern. This Bank of Maharashtra stock has formed cup and handle pattern. After it tried to break out, it is testing at the same level. Now take the case of Punjab National Bank. Same situation, same pattern. I hope you are able to follow. Suppose the stock gives a breakout from this level, the target would be something around 30% if it gives a breakout from this level. So that kind of a potential the banks have now get a proper breakout. Now here in this stock also, the stock has corrected almost to 15% ICICI Bank in this 1.5 years. On a daily time frame, you can notice that the pattern of all the stocks. All stocks stuck in a range either forming a double bottom or a W pattern. Also, you would have noticed some of the stocks have bottomed out. This range bound behavior might leave you wondering, is this it? That will reflect on the price PE ratio. This means the PE ratio would have down or the earning per share would have increased. As you know, PE ratio is price to earning ratio, which is equal to current market price divided by earning per share. That means to earn 1 rupee profit, how much money we are willing to pay is the ratio. That's when we say the stock is overvalued. Now have a look at my screen. In this screen, I have taken market price, PE, earning per share from July 2023 and the same data for the period of January 2025, that is up to date till last Friday for the selected stocks. And you can clearly understand that the price correction and time correction has already happened to most of the stocks. Current price is almost the same as 2023 July stock price. But PE ratio has come down, earning per share has increased. This shows that the overvaluation of every stock has been corrected during this time period and now it is available at a fairer price. This indicates that the market has already discounted all the information. Time correction has affected the stock price. There are some more key ratios will give us further conviction on these stocks. First, customer deposit. Stable and growing deposits are essential for growth of any bank. Then loan growth and quality. Once they collect the huge deposit from the customers, they lend the money to slightly higher interest rate to or retailers because banks thrive on lending. Number 3, net interest margin. The difference between the interest they earn on loans and the interest they pay on deposit. Cover ratio. The other services offered to the banks are like UPI, credit card services, ATM and all. Bank has to maintain liquid cash so that the customer can withdraw money using these services. The liquid cover ratio is crucial for any bank. Ideally, 30 days cushion of the cash outflow will help the bank with a smooth run. Higher the LCR, the better. The elephant in the room, the government policies. Interest rate changes, regulatory measures, economic growth, budget all have a profound impact on the banking sector. Then CASA ratio, current asset and savings account deposit versus total deposit ratio. Higher the ratio, better. One more key factor is NPA. It's not just doing so much volume of business, it's about quality of loans. Minimizing non-performing assets is cases of S Bank, SBI and Punjab National Bank issues due to huge lending and non-performing assets. How the bank were severely affected in 2020. Alright, if these are working out properly in any bank, we don't have to worry too much about market fluctuations. Now, look at their revenue, net interest margin, liquidity cover ratio, CASA, NPA, and trailing 12-month profit after tax. In addition to PE, EPS, you need to look at these data also to find out good stock. And dear viewers, these informations are not readily available as one table. I have collected from each bank financial results. This requires a lot of time and concentration. If you like the content so far, please do like, share and subscribe and press the bell icon so you get the notification. Your comments and encouraging words will motivate me to bring more quality content like this. Alright, let's continue. Now look at this table of content. I hope now you have got a broader picture of these stocks. All the banks are behaving in a similar pattern. Most of the banks have 3% net interest margin, more than 130% of LCR and less than 2% of NPA. It's a good sign that the banking industries are going on the right track. Banks like SBI, ICICI Bank of Maharashtra, Axis Bank, and if you see their PE ratio is very less, EPS has increased and these ratios is also very impressive. If you like to know more about any particular stock, use Screener, Ticker Tape or any other app and do more research to find out more about this particular stocks. I feel most of the stocks have bottomed out and the reversal will happen immediately after the budget announcement because financial institutions are an integral part of country's economy and growth. It's a must for any government to support the banks in way of right policies, schemes that can pass on to the customer. Hence, I feel this budget will definitely have a positive impact on bank stocks. If you are a long-term investor, continue to hold the stock, or if you are a swing or positional trader, it is time to add bank stocks in your watch list and do further studies. Let's not worry about the froth and noise of the market and also not wait for the magic to happen. Let us stay focused, do our analysis, find good stocks and stay invested. Before I end my video, let us summarize the key discussion points. Number 1, market discounts everything. 2, most of the bank stocks are range bound and may rebound very soon. As valuation adjustment already happened, it's time for us to consider for some investment. I hope this analysis gave you all a very valuable overview of the banking sector and its current state in a broader way. Thank you for watching.